Alright, well, hello everyone. My name is Troy Van Petering, with me is Anton and Tyler. And today we're going to give you guys a stock pitch for a buy for Starbucks. Kind of the reason we chose Starbucks was because we wanted to kind of have an established company that was showing strong growth potential. And we believe that Starbucks is showing that. We have a target price at $110 and their current price is at $84.
Okay, so some history about Starbucks here. It was founded in Seattle, 1971. CEO is Kevin Johnson. Starbucks is the third largest fast food restaurant by number of locations in the world. They currently have 29,000, and then it's the largest coffee house chain in the U.S. It makes 10 times more revenue than its closest competitor. And then expanding internationally, and then Starbucks makes 91% of its revenue from sales in stores, and then the brand is their greatest asset.
So this is the financial overview. So obviously we're in consumer discretionary and in the restaurant industry. Just wanted to highlight the beta is 0.52, making it not very volatile to the market.
Did you take that beta from the Bloomberg terminal, or where did you get it?
I think it was either Bloomberg or the Morningstar.
Okay.
I'm not sure if it was. What was it? Yeah, so not volatile to the market, but we still think there'll be growth, and we'll get into that. Yeah. Obviously, like Troy said, the current price is $84 and the target price is $110, and then we have a dividend payout ratio of 49.32.
So looking at these two graphs here, the first one to the left, Starbucks compared to the sector discretionary in the last 5 years, clearly outperformed it, doubled as much as consumer discretionary. And then to the right, the S&P 500 also outperformed that as well. And it's gone up a lot, but in the latest September 2019, there was a little dip. And this was because they announced weaker than expected 220 earnings.
This is the breakdown of our target price. We used FCFE, DDM, and the relative PE. It shows the 40% to DDM because they do pay out dividends, and it's significantly higher than the industry average, so we wanted to weight that significantly. And the relative value is at only at 20% because it was slightly difficult to find comparable companies within their sector, so that's why we kind of made that one a little bit lower than the other two to get a target price of 110.1, which was slightly high, but when we looked at other evaluations, they were around that as well. So that's about there.
What assumptions went into that valuation? What growth rate were you assuming?
We did it a percent higher growth rate just because their expansion into foreign markets, which we can get into. And then the other one we had a little bit lower. I'd have to look on the Excel sheet. It was just a tiny bit lower because we think that they may lose a little bit of revenue due to this expansion and licensing more stores. That was kind of the thinking behind that.
Okay.
On the right side is just the analysis and kind of the metrics we looked at, but on the left side, this is kind of the big thing we looked into in their growth analysis. So if you can see that, the dark blue is same store growth, and the light blue is sales growth rate, and we compared them to Dunkin' Brands, McDonald's, and Wendy's. As you can see, our same store growth and the sales growth are doing well compared to competitors. We really wanted to look at same store growth because Starbucks can just like implement a bunch of new stores, but if the stores themselves aren't making any money, that's not going to really do much. So looking at them individually and seeing that they are growing is a really good way for us to look.
What's the time period for that graph?
This was last year.
Okay.
And that was all taken from Bloomberg.
So this just kind of shows their company-operated stores on an international scale. As you can see, the U.S., China, Japan, and Canada kind of have the bulk of it, but this is we wanted to show this because they are expanding into China quite aggressively. US chunk is quite large, and I think they have a lot of room to grow that China one, which is what they're trying to do. And in addition to that, they're trying to license a lot more stores because licensing stores only is 11% of their revenue right now. So they're trying to do that more, especially in the Chinese market, to grow that.
They do like the company-owned stores more because they have like that kind of trend and like say in the States, like everyone kind of wants to go to Starbucks because everyone's doing it, but places like, I don't know, not to mention maybe like Italy, like people aren't going to want to go sit down in Starbucks as much as they might want to here.
Do you have a geographic breakdown of where their stores are located, like which countries?
Was that kind of this?
Yeah, that's kind of where they're at, like in the US, China.
Okay,
They
that's.
also have like the Latin America
Yeah.
stores too.
Okay, question, so their largest market outside of the US is China, right? There's a lot of shades of blue
Yeah,
on that graph,
yeah,
sorry. Have you guys heard of Luckin Coffee?
Yeah, we're gonna get to that.
Okay.
Yeah. So these are the comparable companies we used. We wanted to use McDonald's just for like the market cap. Obviously Starbucks and McDonald's are kind of the heavyweights in the restaurant industry. McDonald's market cap is like 144 billion, and Starbucks is 99, and the next closest is like 30. So that's kind of why we put them in there. Dunkin' Brands is because their business model is similar to Starbucks. And then I wanted to put Wendy's in because they announced that they're going to start serving breakfast, and that like showed like a drop in their stock a little bit. So we just wanted to like show that like they do have an impact on Starbucks too. And then all these valuations like PE, PEG, and EV over EBITDA, they're a little high, like making Starbucks a little bit overvalued, but we still think with like the Chinese expansion and the things they're doing right now, with some partnerships that we'll get into, are gonna, like it'll be fine and we'll still be growing in the future.
Some of their keys to growth, you guys saw the same store growth and their sales growth on the chart beforehand, but just wanted to highlight that again. Social media is obviously a big thing for Starbucks. They're extremely prominent in that area. A few specifics, they have 37 million Facebook likes and over 7 million Twitter followers, so that aspect, they're very prominent. Then some of their overseas expansion into China, they've recently signed about a $7 billion deal with Nestle, giving Nestle the right to distribute their products within China. And Nestle has a high distribution power in China, so this is going to help them get into that market, which they want to grow into. And then just some other specifics, they're moving into more electronic payments, loyalty programs, stuff like that. And then food and beverage delivery, Uber Eats and Alibaba, which is two companies they've recently partnered with that we'll get into next slide.
Another thing with Nestle is that they kind of like partnered up with them because it kind of gets their product into like households all over America too, with like I think they have like their like K-Cups or like the Keurig things, so that's gonna help them get their products into households all over America too.
So international opportunities though for Starbucks. So for Alcia, which already franchised more than 900 Starbucks stores in Latin America, the new deal expands its ties with Starbucks outside of Latin America and brings its partnership with the chain to 9 markets globally. And then Alibaba is like the Chinese Amazon, and they will help Starbucks to connect with the Chinese consumers. And they're going to help Starbucks kind of getting into the food delivery in the future. So in September 2019, Starbucks and Alibaba launched both voice ordering and delivery. So the company that's going to do the delivery is called LME, and it's like the Uber Eats here in the US. And then for the last 2 bullets, Starbucks management wants to maintain a certain level of control over its stores, and therefore still favors company-owned restaurants. And the company wants its baristas to understand its culture, vision, and value statement, and believes that this is the easier if more restaurants are company-owned.
So innovative ideas. They have things like Starbucks cards. This is like loyalty. It's like every dollar you spend, you get 2 points or something like that, and it just kind of gives consumers like a reason to keep going to Starbucks. And then, like Troy mentioned, the online business with mobile payments and ordering apps is just kind of where we're headed right now. And then the partnership with Uber Eats, it's going to have 2,000 locations in US and China, and then they want it in 2020 to be nationally in the United States, the national coverage. And then another cool thing is they're going to have their first mobile store in New York City, where you just order it and you can just go pick it up. So that might be a good thing for those bigger cities that people might really like enjoy and like.
When doing some research, we came across some stuff about closing stores recently. When we got into it and they talked about it, the affected stores were mostly in urban areas that were densely populated. They're almost cannibalizing the market there. So those stores did get closing down, but they're still opening lots of other stores, just moving into different markets. So yeah, we just wanted to mention this because if maybe you guys have heard about it. We're not too concerned about it. We think that it was mainly just to move their influence kind of wider instead of having it so condensed into one area.
So in going into risks, all of these are found on the 10K, and as we talked about earlier, international competitors, so like lacking coffee in China is one of the biggest one there, and might make it difficult for Starbucks to establish them there as well. So like for example in Europe we have something called Joe and the Juice. They're already a big one back home there, so that might make it harder for like Starbucks to establish them in Europe as well. But other than that, it's the US-China tariff increases, entry of new competitors, foreign currency exchange rate fluctuations, food and safety regulations, health risks, increased cost of high quality coffee beans, and then economic conditions and relying on third-party food suppliers.
That was all like their risks on the 10K that like they highlighted.
So which of those do you think is especially relevant?
The Luckin Coffee is like definitely like their biggest competitor in China. That's kind of who they're competing with.
China too.
So some catalysts and news. They just unveiled a reserve roastery just on the 12th in Chicago. I just like watched the video on it. It's actually pretty cool. It's just like they roast their beans there and sell it there, and I think it's going to be like a tourist attraction in Chicago for like people to go see. So I'm sure their drinks are pretty expensive there. Another cool thing is customers having the ability to reserve tables. They said like in like populated places like San Francisco, this will be good for like students or people after work. Like Starbucks might be full of people. It might be tough to get a table, so they can reserve that, and that just started. And then they tried an open bathroom policy, but there's a study done, so like anyone could come in and just use the bathroom. But there's a study done, and like there's a lot of homeless people coming in, and the facilities and bathrooms are like becoming like dirty and kind of pushing away customers, so they've like abolished that, and that's no more. And then getting into the holiday season, I think right now is like a good time to invest because of it. A lot of people like the new things like holiday cups and like the new drinks that they put out. So I think now is a good time. And then iced coffee and iced tea is like one of their best sellers. It's like one of their most expensive drinks, and it's just kind of what everybody is like leaning towards now. So that's definitely one of their key drivers. So that's it, yeah.
Okay, so a few questions. First of all, there's like a chart in your handout. I don't know what this is.
Yeah, that's.
We just I can go. They have like significant debt. It's like 11 billion, but we weren't too concerned about it because that kind of shows how they're going to pay that back in the coming years. And from what we got, it looked like it was pretty efficient. So that's kind of just we wanted to show that. Be concerned about it.
Okay. Did Starbucks talk about further growth plans in China and how that's going to work out given that they have more stringent competition there?
I think a lot of it is just with good partnerships. They kind of not focusing on Nestle or Alibaba or Uber Eats. They're trying to expand all over into each area.
And when you talk about partnerships with Nestle, is that for retailing products or actually opening stores?
It's more for retail. It's just giving Nestle the right to like sell and advertise their product without like licensing stores and stuff like
How much of Starbucks' revenue comes from retail, like selling Starbucks branded coffee, say in a supermarket, versus from stores?
91% of the revenue is from store sales. Yeah.
And so, is scale important for a coffee chain? Because you have 3 reasons here why we should buy Starbucks, and the first one is basically because they're large. Is that important?
that. I think it has merit to it, especially when they're expanding so far into China and other areas. I think that being a large, well-recognized, well-run company is something to consider at least.
Okay, so what aspects of scale or size would be important for Starbucks?
I think reputation could be one.
I think mentioning like the same store growth too is like important. Like you might have a large company, like I said, and just keep like putting new stores in, but if those stores aren't making money, then you're just a big company. But like that one graph we showed that they do have same store growth.
So that's profitability, which is different from scale, right? I think you're touching on it, which is brand, but just size in itself, especially if you're talking about a company that you're excited about because of growth prospects, unless that size itself like makes it better at growing, at entering new markets or doing things, then I don't think that's necessarily an advantage. Brand might be an advantage for Starbucks. It's still viewed, especially in some overseas markets, as a premium brand, right? And so people want to get a Starbucks coffee because it is a Starbucks coffee. So I might view brand as an advantage, size maybe just for the sake of being large, not as an advantage. At some point, you do have to start closing stores because you have one on every street corner. You guys already kind of mentioned that. What about these partnerships? How does a partnership with Uber Eats work, for example? How is that beneficial to Starbucks?
That's just like the delivery for, like they'll start delivering their product. Obviously, it started in the U.S. And then Alibaba has the Almi company that's going to deliver for them there. So I think that's just kind of where like things are going now. Is people want things brought to them, not go get it themselves.
That's one thing we wanted to look for when you mentioned, when we first mentioned Starbucks, that what are they gonna do about things like Uber Eats and all the stuff that can just bring food to you. So it was exciting to see that they're partnering with Uber Eats so that they can be a part of that.
Okay. And so have any of you used Uber Eats or a delivery service? How does the pricing work as a consumer? Do you see how much you're paying to Uber Eats versus for the product that you're actually purchasing?
I'm not exactly sure.
It's like extra buck or something.
DoorDash.
Yeah.
Like I know in DoorDash you do see like a $4.99 delivery charge or something.
Okay.
That's kind of what you pay in the tip to the delivery driver anyways if you bought it from a restaurant that does delivery.
Yeah, I guess my question is around revenue splitting and like how visible it actually is.
I know
There's
it
any change in pricing.
like for, what's the app here?
DoorDash.
It varies from every store. One would say $1.99, one would say $4.99. So I think that's negotiated.
Let's see. Questions from the class? I'm gonna look over some of your details here.
So they downgraded their 2020 outlook, right? And that's
Yeah.
why their stock. Did they go into why?
Yeah, it was because of
One-time tax benefit. And that they repurchased 2 billion in shares 2019 instead of 2020.
And then you're talking about how their expansion is going to be like one of their key drivers, but do they have like a great expansion record? Because I saw that they expanded into Australia, they dumped a ton of money into it, and it completely failed. So is that like an indicator of how like successful they are in it, or is that just a one-time thing that happened?
I would say it was kind of a one-time thing. They didn't have as many partners as they do moving forward with this investment.
So it's not a normal thing for them to lose money in their expansion efforts?
Is Starbucks a franchise where, like, if I wanna open my own Starbucks store, I can do that the same way like McDonald's are franchises, or? Yeah, okay.
They do have licensed stores, yeah. So they have 15,000 company-owned stores and then 13,000 licensed stores.
Okay, what's their plan in China to have licensed or company owned?
Yeah, I think both. They do want to stick with the company-owned just because, like, they want that, I don't know, that brand and trend, and people want that, yeah.
And then with licensing stores, do they still have to buy the specific beans that they're roasting in the United States? Like, I know that sounds weird, because they do have like, I'm wondering if they're licensed stores in China, and it's up to kind of like the owner of that little store to make things run as they should, if they can kind of get away without being hurt by the tariffs between the United States and China. Does that make sense?
That's a good question, yeah. I assume that, I don't know that for sure, I assume that they would have to use like the same coffee, because it's like Starbucks coffee is what people want.
So do you think any of Starbucks' beans are actually grown in the US though?
Well,
No.
but roasted,
Uh,
where they can control the type of roasting, but that's also the,
So that's a fair question, where they're actually processed and where they're kind of coming from, but my assumption would be they're probably not being processed, shipping raw beans to the US, roasted there, processed there, then sent to China. But it's worth looking into.
just for, if their whole thing is coffee beans, if that's gonna be hurt by the tariffs, or if the tariffs actually won't even touch Starbucks products that they're selling, so.
So not everybody likes, I always think of Starbucks think about sweet coffee drinks, right? I don't think they really have like a classic kind of a latte kind of thing. Some of those countries that they're expanding to, I don't, do they have, is that consumers' preference there? Do they like sweet drinks? I know like some places in Europe, you ask for an iced latte, and it would be funny looks, but we don't make that. We're ridiculous. I don't know if that's something that.
I think that's why, like, you saw in that pie chart that they're in, quite a bit of their revenue for stores are in China already. So I think, again, that's with, like, their size and their brand. A lot of people buy Starbucks just to buy Starbucks. And I think they have that brand.
I think it's the
recognition in
brand,
China.
yeah, the brand is just so known and large that people are like buying the product just for the brand.
Yeah, in countries that still like American products, because do you know how many stores they have in like Europe? Because I know they had a huge problem, and especially Italy, because Italy was like, we don't want your coffee, it's disgusting.
Right.
So, like, they're focusing on China, but do they still kind of care about Europe? Or are they kind of backing off, going away from, like, not wanting to compete with French coffee and Italian coffee and Turkish coffee?
That's a good question. I don't know, what do you think?
I'm not sure, honestly, if we just really focused on the Chinese initiative that they were having, because we thought that was going to create major potential, but again, it's.
So two kind of points there. Starbucks does change its product mix by geographic location. So for example, in China, they have a ton of green tea beverages and things like that. They've had them for a while. Question around Europe. I would say Starbucks is still quite prominent in countries that don't have a strong coffee culture. Like, for example, the UK has a ton of Starbucks. UK coffee culture is kind of at a macro level, it's more of a tea culture than a coffee culture. If you've ever been to the UK and ordered coffee, they're not especially good. So Starbucks seems to have done pretty well there. That's very anecdotal, but it's something that's worth kind of looking into in terms of whether you think that's actually a growth region for them or not. But I did have a question kind of around product mix. So Starbucks has bought a few different brands like Tivana, I think it's like Evolution Fresh or some sort of juicing brand. They bought like,
Yeah, they own
Boulangerie.
Seattle's Last Coffee and Tijuana.
so they own a few different brands, and some of the ones that they bought were more to have access to the products and be able to carry them in their stores. How have those acquisitions worked out for Starbucks? Have they made any acquisitions more recently?
I think they've worked out really well. I feel like Starbucks is a place that is always bringing something new to the market, always a different drink or a different flavor or something like that. So I think the acquisitions have been great for them. As far as new ones, I'm not entirely sure of any major recent ones aside from the partnerships.
Okay, I think maybe doing a little bit more searching on how they've integrated some of these acquisitions into their stable might be good. Tivana, for example, they ended up closing all the Tivana freestanding locations, and I think they still offer their products. But that one was maybe kind of a flop overall. So some of the acquisitions were maybe less successful than others. Might be worth doing a little reading and seeing how they went. And then licensing versus company-owned stores. Has Starbucks indicated any, you guys mentioned that they prefer company-owned stores. Have they provided any sort of financial data comparing the performance of the two? Is there more
Yeah.
licensing overseas? How do they differ?
There's a lot more licensing overseas, and licensing only accounts for like 11% of their total revenue. And so I think that's an area that they're trying to grow by doing this expansion in China and allowing companies like Nestle to run their stores in different markets.
Okay. Especially given their emphasis on China, I would also like to see you guys on Thursday talk a little bit more about the direct competition with Luckin Coffee. Luckin, like 10 years ago, didn't exist. And now is a publicly traded large competitor that basically just wholesale copied Starbucks' business model in China. So is that something that Starbucks should be concerned about?
I have one chunk here. It says Starbucks is betting on China to help fuel its earnings and sales growth amid a maturing U.S. market, but a local challenger is emerging to threaten those international growth prospects. Luckin Coffee is poised to threaten Starbucks' dominance in China. They're a quick-serve coffee chain primarily operating through pickup and delivery models and offering 100% cashier-less environment.
Okay, so that's what Luckin Coffee is. Are we still excited about Starbucks? Do we still think they can grow in the Chinese market, given that that's the competition they're facing? Here's the question for you, okay?
Good.
Other questions or comments from the class?